So this is going to be the first video of my journey trading. I've been doing it for a while, and I'd like to begin creating content of my journey because I think it's a great way to make money on the side for most people. And even for some, they can make it all the way to being full-time just trading, taking most of your income from trading live markets. And that's certainly the case for me. It's become a goal of mine to make this become a reality. And now I'm not quite there yet, but it is a long-term game. And I think the first problem that people have is they get into trading and crypto and all these things because they think it's a quick way to make a lot of money. And that is the absolute wrong way to think about it. It is a great way to make money, just not in a short period of time. If you want to make money in a short period of time by essentially getting lucky, then go play the lottery. Now, in trading, there's many different strategies. You know, there's swing trading, the more popular day trading. There's just a ton of different ways to do it and a ton of different ways to make money. And there's a million different strategies that all work the same. I don't think any strategy is necessarily better than another. That being said, I've tried multiple different strategies, multiple different time frames, ways of trading, long-term, short-term, day trading, scalping, etc. And I think my strong suit currently is swing trading, especially because I started mainly trading crypto. And swing trading is really good for crypto because the markets never close. And now looking into more consistent ways of making money in the markets, I look to TradFi, which means trading things like futures, which I have absolutely loved. And now my trading methods started from simple support resistance, Fibonacci, things like that, and just seeing where the hype was in crypto tokens. At least that was the way to do it. And moving into futures, they don't have anything like that. It's a completely different way of trading. You can't just buy a meme coin and get, 100x from it. You have to come in with big size and get out with bigger size, ideally, right? And with futures trading, I find that scalping is a lot more beneficial for my type of personality, my type of mindset, and more fits my structure that I like to show up every day and have something to do. So day trading, scalping is something that I'm learning to take on a lot more seriously and develop my skills in, which is why I'm kind of starting some content around that, kind of documenting my journey on trading. It's a passion of mine, and I just like to share it with people, maybe meet other people that also are on the road to trying to be a profitable, consistent trader. And yeah, so in this video, I'm just going to talk about kind of my strategy, what I like to look for, because I trade level to level. I've looked into ICT, I've looked into auction theory, just a whole ton of different strategies, like I said at the beginning. And I've kind of found a strategy. It's kind of a combination of a lot of these concepts that are all really kind of saying the same thing. It's like there's liquidity in the markets. There's obviously algorithms that dictate some parts of the movements in the markets, but there's also buyers and sellers that do exist in the markets. It's not just all some banks controlling the markets and delivering price. At least that's not what I believe. I think it's a combination of both things. There's obviously algorithms out there, but there's also huge buyers and sellers. And that's where auction theory, I think, makes sense. And there's also ideas like order blocks that come into play, like at certain prices. All traders see the same patterns develop, right? And no matter what strategy you're using, this order block, for example, may have some moving average right under it or something like that. So a moving average trader will buy the same price as an order block trader. Even if they had two different indicators, they see the same level, right? And they buy at this price. With my strategy, I mainly use a handful of things. Order blocks is one of them, right? Another thing I use is volume profile, right? So normally when people start trading, they have a volume here down on the bottom, on TradingView at least, and it shows you how much volume at each given time there was in the market. What volume profile does is horizontally shows you volume. So volume relative to the price, right? So here, this red line is the point of control, right? This is the most popular price from this range of prices. So if you think about a bell curve in statistics, essentially this is the bell curve right here, and then this is the distribution outside of that concentrated 69%, right? So most trading occurred at this price. This is the most popular price. So order blocks, volume profile. I also like to use something called VWAPs, right? There's indicators for this. I like to use this VWAP indicator because it shows me VWAP from yearly, weekly, monthly, and even daily levels if I want to mess with it. And I don't have to plot it myself, right? There's also anchored VWAPs that you can use on TradingView here. And you can just anchor it to the swing high or the swing low, right? And it'll give you the price that on average traders paid or participants of the market paid from this swing low, for example, up until this current time zone, so time point. So this is the average price paid by people, participants of the market, from this swing low to the current point. Average price paid. So this tells me that the average participant is in profit because if we're above VWAP, right? And price tends to come down to VWAP again, right? To find liquidity. Not all the time, but that is the idea, right? And VWAP tends to be a bungee as well. Now, if I take it from the swing high, for example, traders that bought from this point onwards are under, right? They're underwater because they bought the Pico top and we haven't reached the Pico top since. So that's a valuable piece of information. So honestly, those are my three main indicators that I use. But I also love Fibonacci levels, especially the golden pocket, right? This isn't a clean golden pocket, right? But most people have heard of the golden pocket or the 786 or whatever it is, key retracement levels. And the way I see it is I like to understand why, okay? Like, yeah, I can pull up like multiple examples where the golden pocket was a perfect retracement, right? Like, or the 786, like price from this swing low to this swing high, price came into the 786 near perfectly, right? If I lined it up. And people all have their own theory, and like they say it's because the markets are governed by algorithms, and according to the law of nature, even algorithmic AI coded bots will trade in a Fibonacci pattern. I like to see it like this. The golden pocket is the 618 to the 66, right? In a bell curve distribution, once again, on average, what are the numbers that are most common, right? 69th percentile, 68 point whatever, right? And that's how I like to see it. It's going to be in the 60s, right? That is the why behind the Fibonacci level. But not only the golden pocket, I like to look at range. I like to trade ranges. So I use this thing called a TR pocket, where let's say this is the range. I pulled it from this high to this low. Now these are our deviation targets. So if price wants to deviate outside of our range here, right, it'll come into this TR pocket and then bounce back into range and be range bound again, right? And same thing on this side. If it wants to deviate above our current range, let's say price breaks through this order block, retests it, but breaks above the range again, I'm looking for a short at this TR pocket, because price generally will come back in and either retest the top of the range once again before continuing higher, or break back into the range, right? And you can back test this yourself. I've used it plenty of times. I'm sure I can find examples, but I won't go that deep in today's video. However, those are some of the main things that I like to use. Some things I'm looking to add are maybe the harmonic here, and honestly, that's about it. I don't really like using channels, the trend channels. I think that's also really subjective. Also, another thing I really like to use is this indicator here, but you could really do this manually if you wanted to. I mark out key open levels. So the yearly open, monthly open, weekly open, and I also like to trade Monday's range sometimes. As you can see, this is the beginning of the week. So Monday's low and high are still being formed. But once Monday closes and we start trading into Tuesday, then we have what's called the Monday's range. So from Monday's range, I could pull my fib from here to here, and I'll be looking for trades that come either a break above Monday's high to sweep liquidity and then break back in, or below Monday's low, take out the deviate lower, take liquidity and come back into the range again, something like that. And I found that to be a pretty profitable setup as well. But these levels tend to be respected pretty well, the yearly opens especially, and the monthly. So I like to mark those on my charts. I do use the indicator, but I like to mark it with a horizontal array anyway, just to have it on my chart and not have to have the indicator up for everything. And then those are really my main levels that I like to mark out. When I bring all of these things together, then I can find some great setups. For example, if I think this is the bottom for now because it came into this level of equilibrium in this range, I'm going to look for a golden pocket so I can short it again, because I think price is going to come up just to come back down, right? So I'm looking for price to come back into either this golden pocket or this 786. And now, in order to choose which one I think is more likely, I'm going to try to find confluence to which level seems better, right? And obviously we have a weekly order block here that I marked out. I'll just take it off. Here I had marked out add to shorts because I was short. I didn't think this all-time high would be broken, and as you can see, it played out pretty well. Added to shorts again up here, and it came all the way back down. Now from here, I think price is going to bounce and make another lower high. So I'm looking for a fresh short into one of these levels here, right? Now the point of control is a little higher for my liking, so I'm not really a huge fan of that. So what I'll do is I'll just play around with it. I'll see, okay, if there's nothing there, what about this, right? Obviously that's not going to play out, okay. If that doesn't play out, I look at, okay, what are my key levels here? We got the monthly open. We got all these Monday and weekly opens down here. All right, well, that's not going to help me here either. Let's look at VWAP. VWAP monthly is up here, right? Let's see what the quarterly's at. I think it's lower. Yep. So monthly VWAP is down here. That's not really going to help me either. So as you can see, this isn't super... this isn't going to be a super great setup if I take it with just my golden pocket level alone. I'm looking for when a golden pocket level comes in with a point of control level together, or with a VWAP in the middle of it, something that adds confluence, right? If I look at the NASDAQ, I'm sure I'm going to find even more confluence. So let's look at the NASDAQ. I'm going to clear the chart real quick. I'm going to fill in the gaps. Okay. So first thing I do, I'm going to mark out key opens, right? Yearly open, mark out monthly, right? And honestly, I'm going to leave the rest for now because they're not going to be too useful to me right now. All right. So now that we have that, I want to look at, okay, where are my VWAPs, right? I don't need this one. So here the monthly and the weekly are together because this was an occasion where the weekly and the monthly were on the same day. So until this new week really starts to play out, the weekly is going to be together with the monthly. So we'll leave those on, and I'm going to start pulling some fibs. I want to find some levels, right? So I'm going to pull it from the swing high down to the current level. And you see how there's a bit of confluence between the golden pocket and the monthly open already. Okay, now I'm going to look at, let's see where the point of control is from this swing low, right? It's in this golden area, right? That's good. That's good for us. That's a bit of confluence. And you can see also that there was a lot of volume in this area where the VWAPs are, right? So these things work together, right? These are important levels. This was the most popular price, and this is the average price participants got into the market, right? That's what the VWAP is for. And being below the yearly VWAP means that anyone, most, like on average, participants that entered this market in this year are now below water here. Just barely, you know, just maybe like 100 points down, but they're down, right? They're starting to see negative, right? And that makes people fearful, right? When they start losing VWAP levels, it starts making participants fearful, because now they're seeing negative on their investments, right? And so from here, I'll start looking for order blocks as well. Okay. And now I like to use either the daily 12-hour or 4-hour levels. And really my execution goes down onto the 30-minute. Okay. You want to take it from a top-down approach, right? So I'll find key levels here on the daily level, but I'll zoom in and look for even more confluence before entering. But for the sake of example here, let's just look for an order block, right? Like a key order block. Let's look at the 12-hour. Let me turn this off. I kind of like this one here. If we mark it out, so now we have, okay, turn on the no gap candles again. So let's say, let's pull the golden pocket from high to low, or low to high, sorry. So let's say price bounces here in this golden pocket. I'll be looking for something like this bounce going up into this zone that we marked out here and reject, make another lower high, and then break liquidity or take liquidity below this low right here. So I'd mark something like this, where this is our new draw on liquidity, right? And we're gonna start aiming, if we're super bearish, if we want to do a swing trade, right? Because this is obviously a massive macro view, we're going to be looking for price to take this liquidity and then this liquidity down here, and then take out the yearly open and maybe these down here. And now we're talking, this is a huge drawdown, right? We're talking macro here. Now this is the general idea, but if we just want this, we're just looking at this week's levels, then all we want to see is this move right here. This price to come up into here and reject. And we want to enter short. And that's all, right? And then once we come down into here, then we'll see how price reacts if it wants to go lower, because we're not really trying to predict the market. We're just going to try to react to what it does. Obviously, we have our models here and our indicators, but that doesn't mean anything, right? These are just the lens to which we can create ideas on where we think price is going to go and capitalize on those levels, right? And think of everything as probabilities, right? Like, this isn't 100% certain. Just because there's all these confluences in this zone here doesn't mean price can't just do this. Can't just do this, right? That's totally possible. But that's why we manage our risk as well, right? So this, for example, is an area I'd be looking to short. I'd be looking for something like an entry like here, right? And stop above here, where it would take price breaking above this golden pocket, the monthly open, this order block, this point of control, and the 786, breaking through all these levels before it touches my stop loss. Obviously, if I simply do this, then I have no idea, right? Most people have no idea. With experience, okay, sure, yeah. You can probably see most of those things without anything on your chart. But at the end of the day, my point is that we can't predict the market. We can make our guesses and put our wager on that, right? And that's all we can do. But I think I'll cut it here. I just kind of wanted to show kind of what my strategy is, trading level to level. Hopefully this wasn't too much, but this is essentially the type of trading strategy I use for swing trading. For day trading, it's a completely similar thing, but I use a few different things which popped up, like the CBD. I use volume profile, I use opening range, etc. But yeah, I could probably go over that in a different video. But for now, hopefully that was a good intro to how I trade my charts. I'll see you guys in the next one. Thanks for watching.